Every day we see how reckless and careless Trump is. He's proud of it. He said, and I quote, "Having a low minimum wage is not a bad thing for this country." Trump said, and again I quote, "I sort of hope that the housing market crashes because he'd make money off of all the foreclosures."
Well, Hillary Clinton saying that Donald Trump is the biggest threat to the economy, in fact, bigger than the British exit, perhaps. Let's go to Charlie Gasparino. He's in London with the reaction from there. Charlie.
Nothing's bigger than the British exit, let me tell you that, Charles. Yeah, I'm here reporting this. We'll know sometime, I guess, Friday, whether they're in or out of the EU. You know, it's interesting. There are two big stories here. There's whether they should remain. That's what the people that want to stay in the EU call it. Or whether they should Brexit. That's the exit people, whether they should leave. That's the one big story. The other big story is what you were just hearing, Donald Trump and Hillary Clinton and the U.S. presidential election. And you know, as you said before, the gloves are off. You know, for a little perspective on this side of the pond, I want to bring in Joe Rundle, the head of trading at ETX. You know, before we get into Brexit and what it means for the markets, I know we briefed you on some of what just went on here. It was Hillary Clinton basically doing a fairly, I thought, coherent takedown. Not so much of Donald Trump's economic policies, because there were holes in her explanation there, but clearly on some of the things he said from a business standpoint and some of the things he said he would do if elected president when it comes to trade, taxes, and debt. Now, here's the one thing that Donald has said early on, which she used his words. Donald has said he would, if, you know, we couldn't afford our debt, there was a problem with paying it back, we would, quote-unquote, restructure it so we would pay less. You know, he came back later and said, well, that means we'll just issue new debt at lower prices, which, you know, that's not a restructuring. A restructuring is when you pay, you go to your bondholders, you say, I want better terms, I want to pay you less. What would that do to the global markets and economy if he actually tried to do that?
So I think the global market take that as a US default, and there's never been anything like that. If the US were to default, it would be chaos through the global markets. We saw Lehman, which was a big event. This would pale into inconsistence to that. This would be a huge event. And if they did manage to perform some form of restructuring that wasn't a default, it would make all the rest of the world debt would effectively be worthless and need renegotiation.
Right. I mean, and I think the average viewer kind of doesn't understand what this means to them. I mean, I know they're home, they have credit cards. If the U.S. defaults on its debt, that means anybody can default on its debt. That means credit doesn't matter anymore, and that means you probably can't use your credit card.
Absolutely. I think what we saw in 2008 was the tip of the iceberg. That was a credit meltdown. If the U.S. were to default, it would just make that look like child's play, and we would see major.
Now, I want to go into Brexit. What do you think? What's going to happen?
So I think if we vote out, there's going to be a considerable panic in the UK markets. We're going to see wild moves. We could see moves to parity between the cable trade. So I think it could be chaos.
How about the U.S. markets?
The U.S. markets, I think, will see a significant fall. I think the U.S. dollar will rise, but the rest of the stock markets will fall considerably and very quickly.
We got to leave it there, guys. Joe Rundle, from head of trading for ETX.